How much money do you really need to start a business? I get this question all the time. And the truth is, there's no single answer. You can start a business with very little money or with a lot. The reality is, your access to capital doesn't close the door to business ownership, but it can shape which doors are open. So, for example, I co founded what has become an almost $30 million company with a partner, a couple of recycled laptops, and $3,500 in expenses that we put on credit cards. So, yes, it's possible to start with almost nothing. But there is a trade off. The fewer financial resources you have, the more time you're likely going to spend finding the right business, pitching investors, or building something from the ground up. Now, while money doesn't guarantee success, it can be a powerful accelerator. It can offer access to better opportunities, it can help you move faster, it can even reduce some of the risk. And what I've found is that the money question comes up most often from people who have a limited amount of capital. So let's talk about what you can do if you have access to few liquid resources. As I mentioned, I've started companies with little money, and that can work well with a startup, especially one where you can quickly start selling goods or services without the need for heavy upfront investment in real estate, equipment, or inventory. The key here is typically quick validation. And one of my favorite examples is Eric Torres Garcia. He came up with this idea he called cocoa bombs. It's basically hot chocolate meets a bath bomb. You drop one into warm milk, it turns into a cup of cocoa with marshmallows. Now, he spent a few $100s in a weekend building a free Shopify trial site. He used this to test his idea with an online video. He ended up driving $8,000 worth of pre-sold product before he even knew how to make it. But that first wave of orders is what gave him the resources to build the business. That business now does over $1 million in revenue as it expanded into other food bomb products. Now, if you don't have cash sitting in the bank, don't assume you're out of options, because many people, for example, don't realize you can use retirement funds without paying penalties or taxes to start a business. It's called a ROBS plan, a rollover for business startups, and we've actually helped at Guidant more than 30,000 people do exactly that over the last 2 decades. But others get creative. I actually know a woman named April that built a multi-unit franchise business off of credit cards. Now, you may think that's pretty risky, but she was all in, and she actually did a great job of timing it right. She used 0% intro rates and built enough revenue momentum where she was able to pay off the credit cards in less than a year before the higher interest rates kicked in. Now, that's not a strategy for everyone, but it's just another example to help you understand there may be other options out there you're not considering. It's worth doing your research. And now I probably need to address the idea of buying a business with no money down, because there's a lot of hype out there, especially online, about this idea. And I will tell you, while it's not impossible, it is incredibly rare. It usually requires an inside connection, a distressed seller, or a business that's massively underperforming. It could be a very long path to a deal, and they rarely come about without hair on them. So if this is the path that you're choosing to go down, just recognize you're probably going to spend a lot of your time networking and sourcing. Now, for people who do have capital to invest, franchises can be an option. Most franchises require an initial investment of somewhere between $50,000 and $400,000. There are smaller investment requirement deals, but those tend to be home-based service models. And there are ones that require significantly more in terms of investment. You can think McDonald's, that's well north of $500,000 for those models that involve significant real estate build-outs. Now, SBA loans can help with leverage, but one thing to know is that banks see franchises as startups. So they're going to want to see strong borrower profiles. And what I mean by that is good net worth outside of just the money that you're bringing into the deal, maybe other income sources, and definitely a well-known franchise brand. Now, one thing I'm a big fan of is buying an existing business. This is an incredible way to reduce your risk, but it also tends to be the most expensive. You're trading some additional cost of getting into a business for this less risky profile, more of a proven model. But because of leverage, though, you may find that you actually need less cash to buy an existing business than perhaps to fund a franchise if you're not able to get a loan to help with that franchise. So let's break down an example. Existing businesses are valued based on a multiple of profit. So for example, let's take a $1 million revenue business that's generating a couple $100,000 a year in profit. That business might sell for anywhere from $400,000 to $800,000, really depending on industry growth, other risk factors. And you can often get an SBA loan to finance the majority of that purchase. Now, there are some low down options out there, but most people are going to need to put down 20 to 30% on an SBA loan for that type of transaction. And in this example of that $1 million revenue business, that's going to mean somewhere between $80,000 and $240,000 as a down payment. Now, I want to point out, you're still going to need some reserve cash for working capital or surprises. In fact, the banks are going to expect that. They want to know that you're going to be able to weather a storm with either other assets you have or additional income. So the question, how much money do you really need? It depends. You can start lean, you can raise funds, you can buy something established. The really important thing is to understand your options and to match your strategy to your resources. Because starting a business isn't about having some perfect amount of money, it's about investing what you are willing to bet on yourself wisely. Now, if you find this video helpful, give the video a like. Also, send me any other questions as triggers for you so I can consider it for a future video. Cheers.